While risky, Flexible Solutions International stock remains a high-potential green wave play. Flexible Solutions International announced results for the preceding quarter last week. Commentary from Flexible Solutions International CEO was quite candid, describing the second quarter 2023 numbers as disappointing. But despite near-term challenges, the story hasn't changed with this biodegradable polymers maker, which also has high exposure to green wave trends. Let's dive in. Here's why you should buy Flexible Solutions International stock despite disappointing second quarter earnings. Welcome to Timely Investment Research. Earlier this month, I gave you all the rundown on Flexible Solutions International stock and under-the-radar green wave play. With a low valuation, coupled with the company's steady growth over the past few years, on the surface Flexible Solutions International stock appeared to be an opportunity worth exploring. After diving into the details, more stood out, suggesting that shares in this maker of biodegradable polymers, as well as water evaporation products, had strong future growth prospects as well, even as it dealt with some near-term growth challenges. Flash forward to now. The company just last week released its latest fiscal results. If you've checked them out already, you may start to question whether this stock really is growth at a more than reasonable price or if it's just a typical value trap. My view, however, is that while dealing with some hiccups today, the story here really hasn't changed. Here's why. Flexible Solutions stock and its disappointing second quarter 2023 results. As discussed in my last Flexible Solutions video, the company had already provided investors with preliminary revenue data back in July. With this, it was not entirely surprising when Flexible Solutions reported a decline in both revenue and earnings for the quarter ending June 30, 2023. During the period, revenue declined by 7%, from $11.2 million to $10.3 million. Net income dropped by more than 51%, from $1.66 million to $809,865. Interestingly, instead of trying to sugarcoat the results, CEO Daniel B. O'Brien was quite candid, calling second quarter disappointing and saying Flexible Solutions had predicted a rebound that did not occur. O'Brien also conceded that full-year results will likely be flat to mildly down compared to 2022. This frank honesty, plus the fact investors were bracing for decline in the company's top and bottom line numbers, may explain why Flexible Solutions stock has only experienced a moderate drop in price since they released these results August 14th. With O'Brien's willingness to be forthcoming about the Flexible Solutions' current challenges, in turn the market appears willing to cut the company some slack, focusing more on future potential. This includes potential with its main business, plus with a product line that has yet to really be monetized. Why the growth story remains. With the big drop in earnings last quarter, the sell side has now walked back full-year 2023 earnings per share forecasts for Flexible Solutions International stock. The full-year earnings per share forecast for the company has fallen from 40 cents to 35 cents per share. This may represent a 37.5% decline compared to 2022, when earnings per share came in at 56 cents per share. But it is perhaps safe to say this is already accounted for in the stock's valuation. At today's prices, $2.70 per share, this stock remains in value territory, trading for only 7.7 times forward earnings. Sure, if challenges persist, the aforementioned earnings per share figure could fall back. However, keep in mind that it's factors like inflationary pressures driving these declines. As inflation cools, the company is expected to report stronger numbers overall starting next year, earnings per share forecast of 46 cents per share. Besides a rebound in its primary business, Flexible's green wave catalyst hasn't gone away. Environmental and sustainability trends are favorable for Flexible Solutions International's line of nitrogen conservation products. Growing pressure for better water usage practices bodes very well for Flexible's evaporation control products, which currently generate a small portion of overall sales, a possible long-term buy after recent weakness. Last fall, then strong results from Flexible Solutions resulted in a big run-up in its stock price from under $2 to over $3 per share. Over the past month, with the poorly received earnings report, shares have coughed back some of these gains. This latest pullback may frustrate current holders of Flexible Solutions, but don't view it as a reason to bail. As inflation cools and macro uncertainties ease, the company could soon start getting back towards its past earnings high watermark. This could lead to a big jump for the stock. On a longer time frame, Flexible's green wave catalyst could drive an even more substantial level of growth. This should drive a massive surge in price for shares, both due to increased earnings and because of a multiple expansion. Following its recent weakness, consider Flexible Solutions stock a long-term buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.